In this video, we're going to look at Energy Transfer, ticker symbol ET, the pros and cons to the stock, what it would be worth if you invested 10 years ago, the dividend history, also which financial institutions are buying and selling, plus a look at the financials and forecasted price targets from analysts. My name is Alex and this is my dividend income channel. Let's have a look at the company overview. Energy Transfer is a company that owns and operates one of the largest and most diversified portfolios of energy assets in the United States. The company is primarily engaged in the midstream energy sector, which involves the transportation and storage of oil, natural gas, and other petroleum products. In addition to the midstream operations, Energy Transfer also has investments in other sectors, including energy industry, including natural gas, gathering and processing, as well as propane retail operations. What are the pros and cons to investing in Energy Transfer? The pros: number one, dividend yield. Energy Transfer has a relatively high dividend yield, which may make it attractive to income-seeking investors. Number two, infrastructure business. Energy Transfer owns and operates a vast network of pipelines which are essential for transporting oil, natural gas, and other energy products across the United States. This gives the company a significant advantage in the energy sector and may make it a relatively stable long-term investment. Number three, growth potential. Energy Transfer has been expanding its operations through acquisitions and new products, which may lead to future growth and increased products. The cons: number one, regulatory risks. Energy Transfer's pipeline projects have faced opposition from environmental groups and local communities, which could result in regulatory delays and increased costs. Number two, oil price volatility. Energy Transfer's business is closely tied to the price of oil and natural gas. If the oil price drops significantly, it could have a negative impact on the company's financial performance. Number three, debt load. Energy Transfer has a relatively high level of debt, which may increase the company's financial risk and make it more vulnerable to economic downturns or interest rate increases. Now let's have a look how the stock has performed in the last few years. If you invested $10,000 in Energy Transfer 10 years ago, what would it be worth today? If you invested $10,000 on May 10th, 2013, this would have bought you approximately 666 shares at the closing price of $15. Then as of May 12, 2023, the value of your investment would have been approximately $8,213.33. Based on the closing price of $12.32 per share, that is over a 17% decrease. This is assuming you have not reinvested the dividends, as this would be much higher. The current dividend pays just over 30 cents a share quarterly. From those 666 shares, you would be receiving $204.79, and that is $819.18 annually. Please note that this is an estimated cost based on historical data and does not take into account taxes or transaction costs that may have been incurred. So based on value loss, this would be a total dividend play. With that in mind, let's have a look at the dividend history. Energy Transfer has been paying dividends since 2006. The annualized dividend per share has increased by 63% since 12 months ago. It has only 3 years growth in dividend increases, having a dividend cut in 2020, so that is something to bear in mind. If we scroll through the history, we can see that it has consistently increased the dividend all the way up to the cut in 2020, and then the continuation has increased again. The financials: Energy Transfer is scheduled to report earnings on August 2nd, 2023, with the estimated EPS forecast of 36 cents. Its free cash flow is still relatively high. It skyrocketed in 2021 due to the price of oil. Oil prices then dropped, but it still generated $5.67 billion. The price of oil does really determine how well it does. We can see how oil price affects it here. Year on year, revenue and EBITDA is up. If we look at EBITDA, it is up from $8.42 billion in 2021 to $11.3 billion in 2022. Earnings per share also had a drop-off from the highs of the oil price boom, but it's still fine at $1.54 a share. Now let's have a look at what the financial institutions have been buying and selling. Institutional investors combined own over 30%. This is a greater percentage than is typical for companies of oil and gas. We can see from the top 10 investors that there's been an even split between buying and selling. JP Morgan being the biggest buyer of 12.2 million shares, increasing their amount of shares by over 50%. Interestingly, A big sell-off from Goldman Sachs & Co. of 14.1 million shares, reducing their stake by 28.86%. The Goldman Sachs Asset Management buying 4 million shares. Overall, more shares sold than bought. Now, what do the analysts think the 12-month forecast of the stock price could be? CNN Business have an average 12-month price target of $17. That's 38% upside from where we are today based on 15 analysts. TipRanks have an average price target of $16.67, 35.31% upside from where we are today based on 9. And Zacks have an average buy price of $16.75, 35.74% upside, and that's based on 12. If we zoom out over the last 15 years, we can see that progress was generally great, peaking in June 2015 at $34.20 a share. After a significant drop-off, it had a bounce before steadily declining again, then the pandemic in 2020, before now steadily moving up. Is it worth buying? The stock price had a 52-week high of $13.67 and a low of $9.15. It has a market cap of $38.15 billion and of course a dividend yield of 9.98%. It is all about the yield. Personally, if I was buying, I would be looking at a sub $10 price point. This would provide a margin of safety. At the moment, I would be concerned about holding the stock for the long term. They say they are committed to protecting and preserving the environment. Although they do have a diverse mix of energy sources, they still mainly rely on electrical energy powered by natural gas. As a long-term play, I would want to see the company investing more in renewable energy if I was to consider investing a significant amount. Thanks for watching. As usual, if you've enjoyed the video, please like and subscribe.